Hello, hello, good morning. Welcome to another ES Futures trading stream. Today is Wednesday, it's July 19th. It is 9:43 a.m. It is this is an unusual time to start the stream. I was present. I was watching Jim's free free webinar that has started at 9 a.m. today. I I cannot recommend enough strong enough that you watch that. You watch you watch today's webinar. It's going to be posted here. Okay, this is the last time that he did something was on 7/11, but it is going. He's going to update. His team is going to update it today. It is the information you have there is fascinating. But I can give you something in advance. What we are watching here is something. I was also suspecting that something was going on here. In regard of let me pull my daily my daily charts here. Just a second, please. I'm going to detach my chart so I can. Okay, right here. We got these markets. This is the different time frames in the market. We have them monthly, weekly, and daily up here. We know about the gaps. We talk about the breakouts here, the 4,500 breakout here. Something really interesting happened yesterday. Yesterday was one of the was quite the day yesterday. I wasn't sure if this level here, was. I didn't label this level as a spike. Yeah, on Monday, on Tuesday. On Tuesday? Or Monday. 17th was Monday, right? Yes, it was Monday. I didn't label this as a spike because I wasn't sure it was a spike. I didn't label this as a spike base. Okay, but yesterday, when the market did this movement with really high volume. The market has extraordinary amount of volume that just was consistent. The volume yesterday was very consistent. You wanna go with the movement, with whatever movement it is. If this movement has volume, backing the movement, it did happen yesterday. It was incredible to me to see one day that is so different. That was so different, not so different, so contrasting with the previous day. Because the previous day was, a day where when the last thing you want to be here was long. Okay, pay attention. The last thing you want to be was long. I'm not saying that you want to be short here, but the last thing you want to be was long here because it was just nothing. It was so weak, all what happened. yesterday. Probably, the assessment was probably this was just short covering for the previous days and the overnight short, 100% short inventory. Yeah? We went from a day when the last thing you want to be is long to the day that the last thing you want to be is short. The market was going to the upside, huge volume to the upside, consistent, really good conviction to the upside. The last thing you want to be here is short. And along with the thinking that you need to go with the trade. Some way or another, you got to be in this. You have to be in the market. Take your chances here. And it happened here actually. It happened at this level here. It was a break. For me at least, more seasoned traders probably realize this moment somewhere in here. I started questioning, okay, this is a spike. I somewhere in here and in here, okay, this is a spike. This was a spike. The market is checking the spike and that's giving us confirmation. Okay, but some kind of like a by the book trading here, right? Having the context as well, having the context that what's going on with bigger time frame money. Okay, why would I see volume here? Why I was see buying here, way up here, right? I didn't see volume, the kind of volume that we have yesterday. I didn't see that kind of volume in a long time. The usually what happens, we have this amount of buying, this amount of volume, and accumulation, right? We have very wide profile with, I hate to say this, with the expectation, okay, of having accumulation here and having rotation. I'm sorry, I was talking. I didn't show this chart. With expectation, having wide profiles with accumulation and the next directional move in the opposite direction. All of this based on experience, right? Or what happened before, what happened during these cycles, and the context also, right? The context of this, why this is happening just now. We have hyperextended market here, and coming actually way up here. What that can be? That was what I was questioning yesterday. To have a better appreciation of that, watch Jim's webinar. Watch today's Jim's webinar, and you will understand more. You will have a better appreciation. And this thing, okay, it's not something that happens often. Okay, remember what happened in the short time frame also happened in the daily and weekly and monthly time frames. We have seen a lot of squeezes in this time frame in the intraday, which is my time frame. Same happened here as well in the daily. There's a lot of times, there's shorts. Here, for example, this is short squeeze here. This movement, this is short squeeze. This is also short squeeze of this range here. What's happening right now? Okay, we haven't seen the short squeeze yet here. That will happen if there is a big bar here. It happens also in the daily, in the weekly time frame. You have this range here, and this is short squeeze. This movement is short squeeze. It happens in the monthly time as well, but it doesn't happen quite often. All right, these are lifetime experiences, but it does happen. The odds that that is happening right now in this time frame are very high. Okay, that could be something that's going on in the bigger time frame, and in the same way, and as how we don't know when the short squeeze is going to be over in the daily or the intraday time frame. There's nothing out there that will tell us, okay, this is over now. There is a reversal here. Okay, there's a rebalance. There's going to be a directional move or whatever. Okay, there's nothing like that happens. We don't know when this is going to be over. It is over. When it is over, we will know that just after the fact. Just after the fact. In the same way also, we didn't know that this was the we know now that this is the low, right? Just because we are almost 1 year after this movement here, after this happened. Okay, that's the market low. We don't know that. Now all the way up to here, there's still some odds that come out. This cannot be the low. Right? The weakness in the structure of this market is just because I cannot, I cannot be, I cannot state, I cannot state, I cannot have this opinion, strong enough. I don't know how to say this, but I am really, really concerned about the structure, about the weak structure of the market. That's holding this market, that's holding this rally, that's holding the whole market. As outstanding amount of weak levels in the lower side. This is just super impressive. Today, relative to yesterday, we have a good opening, okay? Higher, better opening than yesterday. And the volume, though, we are about to close. You have 4 more minutes, but volume is decreasing. It is about to be about the same as yesterday. It has a strong opening just as yesterday, but it's drying now. That's one piece of information. Just one piece of information. If there's going to be any problems, any issues in whatever the market is doing, usually we will find these levels, these century numbers as the areas where the market can have some problems. Now, regarding today, overnight inventory was short. We have a very, very prominent overnight POC. Look at these lows here from the overnight POC. Just look at the lows here. How many times this market or the overnight was bought at this level? What level is this? 84? Let's call it 85. But let's call it 84. 1, 2, 3. Look, just look at this. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Almost 12 times. If you disregard these lows here, which I don't think, this is just a couple ticks, this low is just a couple ticks from these lows over here, we will have 3, 6, 9 times the market bought at this level overnight. Right? This was short. Market was short. There was some rebalancing here, and the market opened. Okay, this is the thing for today. The market opened with a gap. Open with the gap. Yesterday we did not have excess. This market has no excess yesterday in the lower side. in the upper side, no excess. Odds are that the action to the upside has not ended yet here. The market opening here and having upside extension give this high excess. So this high has been corrected now. Now we have excess. We are trading just above the 4600 and there's a tiny micro gap here. And this is the next thing, okay? The next thing regarding the directional move. Right? Let's call this gap high here, and this non-excess now is gap close. Remember, when we talk about what we talk about gaps, the bigger the gap, the higher the odds that the gap is going to be closed. Okay, this is gap high in this chart here. This is gap high, and this is going to be gap close. Coming from the day with that has multiple distributions. We have multiple distributions yesterday. Multiple distributions, emotional market yesterday. Emotional in what time frame is a question, right? Remember, what time frame? It's not an ordinary day, or yesterday wasn't an ordinary day. Remember, what we talk about gaps, the bigger the gaps, the lower the odds that the gap is going to be closed in the first attempt. And this is a tiny gap, just 2 ticks gap here. So having this kind of gap, the odds of being closed are high, right? It's quite the opposite. But it wasn't close at the opening. Now we have a tiny excess. We have technically this excess here. This gap wasn't closed. That delivers a message as well. Okay, what happened? What doesn't happen is also important. Both things are important. Okay, not just what happens, but also what don't happen. Okay, what didn't happen is the gap wasn't closed. The next thing that can happen here, I don't know. Let me check. Well, I will be observing this market really close here. We have higher volume than yesterday, maybe like 5-10%. Let me check how much volume relative to yesterday. 6%. 6% higher than, no, higher than yesterday. We have high volume here as well. Look at this. I call this high volume areas. Another high volume area. Look, this could have been very well 10K as well. But I'm just going to, oops. I'm going to call only that level there. Okay, high volume area. Coming from the high volume area here, and oh, come on. What is from high volume area here, and especially this one. Okay? Now we have another one. I'm having problems with my OSB. And this is 46,350 to 4. Okay. No excess on the upper side. No excess on the upper side. This market, the action to the upside has not ended. That's a sign that there is more to the upside. Okay. The most important thing, if you are not willing or you are not, if you cannot be long here, is don't fight the trend. This market is going to the upside. The monthly time frame is going to the upside. The weekly time frame is going to the upside. Daily time frame is going to the upside. What kind of movement is? Maybe it could be weak, it could be short covering, it doesn't matter. The thing is the trend is to the upside. All time frames are trending to the upside, including the very short time frame, which is that we trade. Don't go short in this market. Okay, don't fight the trend. That's one of the most important things. Okay, if you were not able to take advantage of this day yesterday, okay, it's because you don't have this appreciation. You don't have enough market understanding. If you have taken advantage of yesterday's, what was the reasoning behind you going long, behind you taking a long position yesterday? Were you doing that because because my PSI or my RSI say this, or because the MACD say that, or because my guru said to go long? What was the reason behind that? Okay, because these things don't happen quite often. Okay, just don't fight the trend. You may be right in your assessment of the structure, the weakness on the structure of the market, but doesn't mean we're going to go short. In my personal experience, the biggest losses I have, when I fight was when I fight the trend. I try to fade the market. Okay, this market is going too high. There is an enormous amount of weakness in the upper side. You just cannot keep going high. It has to break. Those were the moments, that was when the market came to me just to kill me. Right? Understand the movement, put things in context. That's very important. That's very important. Today there's tremendous amount of volume today as well. Yesterday was really high. Check this out. Yesterday was really high, all day long, and today is even higher than yesterday. Is volume coming to the market? So far, so good. 4,600 has been taken. There's a lot of volume about the 40. Look at this histogram here. There's a tiny gap here. Good odds the market closes. The odds the market was going to close this gap were high. It just didn't happen. Okay, that was a long here. We have accumulation about the 4,600. This is another level, another central level here. And you will see a lot. Did you see the buying here that happened above the 4,600? I don't see big blocks here. I don't see big blocks here. I didn't see any big blocks in the aftermarket as well. And the aftermarket closed between 4 and 5, and especially in particular within just before the market closed at 5. I didn't see that yesterday. The whole week Actually, I didn't see that this week and previous week. Didn't see that. And having somebody like Jim with the experience that he has, it is really, really, really helpful. It really helps. What I was thinking is, you know, I was thinking this market, we are going through a cycle of earnings that are coming through. You know, I was going again to this earnings cycle where this market does these huge movements to the upside. These have directional move to the upside because earnings come strong. There's no more talking about the recession, and the market keeps going higher and higher and higher and higher and higher. And after earnings season is over, basically after big techs and these big companies, we have the big tech, then we have Home Depot, Lowe's, Target, Walmart, Nordstrom, companies like that. When that's over, there's some rebalancing and also some directional move in the opposite way as well. Once there is no more, there's no more events, scheduled events that can add or bring some volatility to the market. I didn't check the VIX, but the VIX must be in 12 right now. Let me check. For example, what does the VIX? Wow, 1339. This is very impressive. Okay. Now the thing is, if you have here, okay, if you couldn't go long when the market didn't close the gap, when the market took 4,600, okay, just don't go short. Just don't do it. Why you want to short this market? What are the reasons behind you shorting the market, behind you going against the market, against it? It's just a risky. It's super risky now. The odds are very low. Yeah. Momentum is an extraordinary source, extraordinary force in the market. One of the things that we have to learn is also, and Jim also mentioned this, right? Is go with the trade. You see a trade in the direction the market is trading, just go with it. Okay? That part seems easy. It is easy to say, but it is very hard to do it. This level is another reference. What I am monitoring now is I'm not using my regular market profiles here. I am rather using histograms and my comparator here and accumulation. You can see a lot of congestion here about the 46 and I see volume here. This volume has been this area. I guess I would make this bigger. Okay, I can make it all the way down to here. Right? But this area here, the market has come back, has been bought from this area up here, down here. There is tremendous amount of buying coming to the market. This is not one of those days, at least that's what's playing right now. It's not like one of those days that you have sharp movement to the upside. Okay, you have sharp movement to the upside, and later in the day you have a sharp liquidation. This is not of those days. I can feel like there's some change in the market. This is not that market when you have long liquidation, short covering, followed by long liquidation, followed by short covering. The market is not doing that. Okay. One of the things that has is volume. Okay, volume is very different now. The volume in the market is very different. Seems in the same way as when we have these sharp movements to the upside, when could have been here or here, here, if I remember well. It's just shorts from this day, just throwing the tower here. Just throwing the tower, or even this one, had this, no, not yesterday. Yeah, this day here. This sharp movement to the upside, this short throwing the tower. This could be the case for this time frame. For this time frame. Still, we don't know when it's going to be over. Right? Market just keep going to the upside here. This area is being tested again, it's being revisited. There's a lot of congestion. And now market has excess on the upper side. Is this buying? Is this selling? When the market takes these century numbers, these are usually levels where traders take profits. Okay, I say usually, pay attention to that. It's usually, but there's some change in the market going on. These areas is usually what, if there's any problem, this is where it's going to be. Okay, and more often than not, those century numbers are bought once or check the first time. It just don't, the market just don't take those levels in the way how the market has been today. This is a first. If you have any questions, please let me know. This is just fascinating to learn this stuff. Market dynamics are just incredible. I love this.
To Microsoft,
I just love this.
In the U.S. court, why not drop the action from there? Why see?
I love this business. Alright, it is 10:20. If you don't have any questions, I guess this will be everything for today. I wish you guys a good rest of trading day. Stay safe out there. We'll see you now. Bye bye.